Hello, how are you? And thank you much for checking us out here at Black Apple Group. We are committed to providing education, particularly in insurance, but not just insurance, but also financial education. Through our years of research and experience in the industry, we find that the wool has been pulled over Americans' eyes, particularly middle income Americans' eyes. We have grown to accept the traditional routes of financial education, and they're just not working for us. They're just really not working for us. In fact, we are unknowingly, in a lot of cases, contributing to our own financial pains through utilizing the banks and even 401ks. It's not that these things don't have some benefit, but the fact is that they actually have quite a bit of problems that they present to us when we are trying to save more money and have investments, good investments that can give us a return, and ultimately financial independence is getting more challenging. And part of it is because there's such a huge gap in the financial education and the truth about what's going on when it comes to insurance, when it comes to finances and economics that impact all of our lives. These are the kind of things that we want to focus on at Black Apple Group, is getting the truth about what's happening out here when it comes to our money, when it comes to our insurance, and what can we do about it? What kind of solutions can we find that most anybody can take? We like solutions that not only people who have a lot of money can take advantage of, but solutions for the rest of us that we can start with now from where we're at and begin to accumulate one step at a time, accumulate savings, and ultimately accumulate returns, dividends, things of that nature, residual income, in other words, money that's coming in without us always having to go and spend a lot of time to go get it. That's where our freedom really comes from. When we can start getting money coming in with us always having to trade time for the money, then that's when we can begin to experience a bit more freedom, so we can do other valuable things with our time, whether it means church, whether it means spiritual, whether it means vacations, or just spending time with our children and grandchildren. These things are meaningful and important, and we shouldn't have to spend every waking moment just to make another dollar. And there's ways we can still do that in this country, but we have to pay attention to where we're at today. A lot of things have changed from back when I was a kid when it comes to money, and knowing about some of those old ideas versus today can really help us to make better decisions. So I'm going to talk about how infinite banking policy, what it really is, and I'm going to touch on a lot of the positives of it, but also a little bit about, well, what are some negatives to doing this, and whether or not this can work for you. What an infinite banking policy truly is, it's a whole life policy. That's fundamentally what it is. It's all about how that whole life policy is structured. How is that whole life policy put together that gives it its power and gives it the advantages that just a traditional whole life policy just don't have. Traditional whole life policies build cash values very slow. They usually take 3-4 years before there's any monies that is available for the owner of that policy to be able to take out. That's why I never liked them. I never really wanted to sell them in the past, because they took way too long for any monies to be made available for my clients. I didn't like that, because a lot of my clients didn't have a whole lot of money sitting around in an account somewhere. So it was important that these policies had cash values immediately, but the whole life policies did not have it. Well, that problem gets solved with a properly structured whole life policy, where we can add the right kind of riders with the right company, and we can have immediate cash. When I say immediate cash, I mean when you make your first payment, part of that money is made available to you if you needed it, right? So that's way different from what we would sell traditionally when it comes to whole life policies. So you do have to watch for that, because a lot of agents are still selling those traditional whole life policies. So you have to be mindful of that kind of thing. Another positive to an infinite banking policy, or let's just say a properly structured whole life policy, is that the death benefit is constantly growing. When you structure these policies the right way, instead of having a traditional set death benefit that never grows, Well, my clients' policies, the death benefits are always growing. Every time they make a payment, they actually have a little bit more insurance than they did initially. Okay, powerful stuff. In addition to that, and this is pretty commonplace for all life insurance policies, but I'm just going to touch on it. The death benefit is tax-free. So when a person passes away, the death benefit proceeds goes to the beneficiaries without the beneficiary actually having to pay a tax on the on those proceeds. Okay, so that's just a common benefit to all life insurance policies, right? But this policy then is no different in that regard. In addition, there are dividends that get paid with these kind of policies. So on top of guaranteed interest, so with a whole life policy, there is usually guaranteed interest, guaranteed cash accumulation. What I mean when I say guaranteed, I mean it. It's the insurance company contractually guarantees it, that there's going to be some growth in that policy. That in and with itself is pretty awesome. But on top of that, there are dividends. But those dividends only get paid by certain companies. Those companies are called mutual insurance companies. Mutual insurance companies mean that the policyholders have ownership in the in the company, as opposed to a stock company where the only people who have ownership are the people who purchase the stocks. Well, in this case, when you're a policyholder with a mutual insurance company, you have ownership in that company. That then puts you in position to be a recipient of dividends. And with the companies we work with, they've been paying dividends for over 80 years in most cases without skipping a beat. So while dividends in and within itself are not guaranteed, it's a safe bet though, based upon their consistent track record, that those dividends are going to keep right on coming in. So that's what a properly structured whole life policy can do for you. Another benefit is that you can withdraw money tax-free. So what does that look like? Let's say you've put, I don't know, $25,000 in your policy, and the policy has $50,000 hypothetically in cash in it. You can borrow most all of that money and not have to pay taxes on it. It's fantastic, because when you borrow money, you're usually not paying taxes, right? Well, it's no different inside a policy. You're not paying taxes on that money. Now, if somebody passes away, the insurance company would just take the outstanding loan and subtract it from the death benefit. So in that regard, in that way, you haven't had to pay taxes on the growth in your policy, and you were able to use it, right? Which leads me to another very valuable point, which is you will have continual access to the death benefit at all times, continuous access to the cash value at all times. What that means is that the cash in your policy, you can go in and out of it at will. There are no restrictions. You can use your money, okay? So if a person has, I was just talking to a client earlier. She was concerned with paying for the policy. She's close to 60 now, so she's a little concerned with the cost. Well, I asked her, did she have any money sitting aside, somewhere else? She said she did. Well, what we're going to do now is take some of that money that she has just sitting in an account, not really doing much for her, and just simply put it inside the policy. Now she can pay for the insurance without actually having to increase her out-of-pocket costs. Let the money that she's already got saved, let that pay for the first year's premium, right? And she still has access to it in the event of an emergency, because that's what the money she currently has, that's what it was positioned for, was an emergency. So she can still use a good chunk of that money anyway. And she's got the money sitting there anyway, right? So that then can be done. Now, each year, if assuming that she's always saving money, then she just uses the money that she would have otherwise saved, use that money to take care of the premiums of the policy. So that's a good idea for her to be able to pay for her premium without her out-of-pocket or household expenses having to go up. Another positive to an infinite banking policy is the cash values can't be taken from creditors. If you have money in your bank right now, stocks, stuff like that, that money is subject to being taken in the event of something happening. If you owed creditor money, or you had some accident and it wasn't covered, something strange like that, the IRS, they can come and intercept that money, but they can't do it inside when you have cash inside your policy. That money is protected from creditors. So another positive of doing that. I just made some notes for myself. Just wanted to make sure I hit every point for you guys. Another big one, uninterrupted dividends and interest. So I touched on already that these policies have cash values and they have dividends too. So those, you have two things going there. Now, you can take the money out. You could take your cash out your policy. Say you go and use your money for whatever it is, and it maybe takes you some time before you get it repaid. Well, did you know that the insurance company will continue to pay you interest and dividends on that money as if you never took it out? Yep. That's what a properly structured policy can do for you. So you using the money for something else, the company continues to pay you interest and dividends. And the reason that they could do that, because they actually don't take the money out of your policy. They loan you the money, and your policy becomes a form of collateral for that loan, because you've already got the cash in the policy anyway. So they just use it as collateral until you get it paid back. So in that way, you can continue to receive interest and dividends while you're using your money for something else. So that way you don't lose on an opportunity, right? So instead of you having money, say in a bank account, and you want to put into some real estate, that's great. But once you purchase the real estate, once you take that money out of that account, you're not getting any money from that bank account that you took the money from. But in this case, the company is still paying you while you are using the money for something else that could very well pay you. So now you're potentially getting paid 2 times. So these policies that are offered through insurance companies are very powerful financial tools to not just provide you benefits upon your death, but also to provide you benefits while you are alive. And to me, that is what fits the true definition of life insurance. True life insurance should actually provide you benefits while you're alive, not just when you die. See, the name life insurance is to me a bit of a misnomer, because it's actually death insurance the way it's traditionally sold, because this really doesn't have much value until somebody dies. But when you structure these policies the right way, they truly do become life insurance policies. They provide you benefits while you are alive, right? So I wanted to hit these points and make sure that you guys are really starting to understand how these policies work. Now, I touched on some drawbacks to these policies. For starters, it is life insurance. You got to qualify for it. So for people who have significant health problems, they may not be able to put a policy on themselves, right? But there's a way to deal with that. If there is a significant other or a family member that they want to participate in infinite banking, the process, they can put that policy or insure somebody else while they have control over the money. You can do that, right? And I can show you how to do that. But that's another way that you can still have access to the cash values under your control and all that good stuff. And even if you can't get the insurance yourself. So, but that I might consider to be as a drawback, because not everybody can qualify for it. And then because it's life insurance, you still got to pay for the life insurance. So, if you put, $10,000 in a policy like this, you're not going to have all $10,000 available out the gate. You may have, depending on how it's set up, you might have 70% of it or 80% of it available right away. It just depends upon how it's set up, right? But the majority of that money is going to be available to you, at least the way that I put these policies together. A good chunk of the money is going to be made available to you. And I'm going to make sure that this is going to work for you, because I discuss every aspect of the policy, every step of the way, to make sure this is going to work for you financially. And this is something that is going to be there for you in the long haul, right? It also is a hedge in the event of financial setbacks. What I mean by that is, over my 30 plus years of doing this, sometimes we run into financial obstacles and problems that we weren't expected. And it causes policies to get lapsed after my clients have paid for years into their policies. I hate to see it, because to me, it just makes the insurance companies richer. I mean, they didn't have to pay out the claim, but they got all that money. right? And once you lapse that policy, it gets too far gone, you got to start over again, right? Well, in this case, if you've got cash values in that policy, those cash values could be utilized to keep that policy in benefit. So even if you need to stop paying for a period of time, it all is based upon how much cash you have in the policy, but that depending upon how much cash you have in the policy, that money could be utilized to keep that policy in benefit. And then once you kind of get your financial situation together, then you can go back to paying the policy as you once was. Another plus point, and that's just with me being out here in the field as long as I have. I've seen those type of situations happen one too many times, and this is a means to kind of stave that situation off and certainly slow it down, right? So yeah, those are some key points to an infinite banking policy. And what I can do for you is run quotes for you, right off the gate. You're not obligated to do anything, but one of the things I like to do is to run some quotes and kind of explain it to you, and then ask you some questions about where you're at and what you can do. So even if you have to start out small, it's fine. We start out where you're at, and then we build up on it. I've had clients now that have paid off debts with the policy. One of my clients, he's recently used the cash in the policy to help him with a down payment on a new car. Another client needed some money, I think, just to kind of get through because she had to get a surgery done. So the policy works. Just the way we talk about it is very real. And so you can know and trust that the policy is working in a way that it's supposed to work. And then they can start to repay the monies that they borrowed against that policy on their own schedule. Nobody's going to force them to repay it. It's up to them to repay it. But we advise strongly that you get it repaid, obviously, so that you can really benefit from the continual usage of the money, right? So that you can continue to use the money in whatever ways that you see fit. So again, I really want to try to encourage you guys to participate with Black Apple Group. Share this with your friends, and let's get educated, all of us, in how the economy works, how insurance works, so we can use these financial tools and this information to start to make better decisions regarding what we're doing with our money, and not just kind of doing things the way we've always done it, because it's not working for us. This is why so many people are suffering financially, whether they're not saving enough money, they can't retire the way they want to. Financial independence is just a pipe dream for most people. We're not really reaching it. And, and then just on and on. People who thought they were going to retire at one age wind up having to retire a lot later than they anticipated because of unexpected situations occurring. It's too many variables going on. The economy right now is in disarray, in part because of COVID, and then the way the government goes about handling these situations, and we pay for it all. See, that's the problem. We pay for this stuff. Sometimes what seems good at first winds up being a bad thing on the back end when it's time to pay for it, right? But they're not going to tell us all this stuff on the media, right? They're not going to talk to us about that when it's time to pay back. But what we will want to understand is when we go to the store and we're paying more money, a lot more money, for the food we need or for housing and things of this nature. These things are going up at astronomical rates, making it harder and harder for people to be able to save money and to be able to create financial independence for themselves. So it's very important that we get educated. I'm gonna do what I can, play my part in providing that education. So thanks so much for listening, and I'll talk to you real soon.